Imagine waking up to a world where the two biggest economies are at war, not with tanks, but with tariffs. That's exactly what's happening right now. Stay with me as we break it all down. What is the US-China trade war? Let's break it down. A trade war isn't fought with weapons, but with tariffs, sanctions, and economic policies that shake global markets. And in this case, we have the world's two largest economies, the United States and China, locked in an intense economic battle that has been escalating since 2018. At its core, this war is about dominance, global trade, technology, and economic power. The US accuses China of unfair trade practices, while China sees American tariffs as an attempt to curb its rising influence. According to recent data, in 2023 alone, US-China trade was valued at over $575 billion. But with increasing tariffs and restrictions, that number is shrinking, and the impact is spreading worldwide. And here's the real kicker. This trade war isn't just affecting governments and corporations. It's reshaping industries, raising prices for consumers, and disrupting supply chains from Silicon Valley to Shanghai. Why did it start? It all started with one word: control. Control over trade, technology, and economic dominance. Back in 2018, US President Donald Trump launched a wave of tariffs against China, accusing them of unfair trade practices. According to the US Trade Representative, China's policies were costing American companies hundreds of billions of dollars in lost revenue every year. China, of course, didn't sit back. They fired back with their own tariffs, hitting major US industries, agriculture, manufacturing, and technology. A full-scale economic showdown that has reshaped global trade. With new tariffs, tighter restrictions on Chinese tech companies, and an ongoing battle over semiconductor dominance, this trade war is far from over. But the real question is, who's actually winning this battle? The US with its financial power, or China with its massive manufacturing empire? The answer might surprise you. Trump's new tariffs, the latest twist. Just when the trade tensions seem to be simmering down, President Trump has reignited the economic battlefield. On February 1st, 2025, he signed an executive order imposing a 10% tariff on all Chinese imports. This move targets a staggering $450 billion worth of goods, encompassing everything from electronics to textiles. But that's not all. The administration also closed the de minimis import loophole, which previously allowed items valued under $800 to enter the US duty-free. This change has caused significant logistical challenges, with over 1 million packages piling up at JFK Airport, leading to a temporary pause in enforcement. And China, they're not taking this lightly. In retaliation, Beijing announced tariffs of 15% on US coal and liquefied natural gas, and 10% on crude oil and agricultural machinery. China has launched an antitrust investigation into Google and added US companies PVH Corp and Illumina Inc. Are we on the brink of an all-out trade war? How China is fighting back? China isn't merely observing from the sidelines. It's launching a strategic counteroffensive to mitigate the impact of US tariffs, diversifying trade partnerships. Chinese exporters are actively reducing their dependence on the US market by exploring alternative destinations. They're intensifying efforts to penetrate markets in Asia, Africa, and Latin America, relocating production overseas. To circumvent US tariffs, many Chinese manufacturers are relocating their production facilities to countries with more favorable trade terms. This strategy not only helps in bypassing tariffs, but also strengthens China's global supply chain resilience, restricting exports of critical resources. In a strategic move, China has imposed export controls on essential minerals like tungsten and bismuth, which are vital for various industries industries. This action underscores China's leverage over critical global supply chains and serves as a potent reminder of its pivotal role in the production of key materials. Targeting U.S. corporations, China is also scrutinizing major U.S. companies operating within its borders. For instance, it has initiated antitrust investigations into tech giants such as Google and added firms like PVH Corp to its unreliable entity list. These measures signal China's readiness to challenge U.S. corporate interests in response to American trade actions, advancing technological self-reliance. Under President Xi Jinping's leadership, China is accelerating efforts to achieve self-reliance in critical technologies. The nation is making significant investments in high-end manufacturing sectors, including electric vehicles, aerospace, and robotics. The economic impact on you. Now you might be thinking, why should I care about a trade war between the US and China? Well, let me tell you, this battle hits closer to home than you might realize. Rising prices on everyday goods. Imagine heading to your local store and finding that your favorite gadgets, clothes, or even toys have suddenly become more expensive. With the US imposing a 10% tariff on Chinese imports, many products we rely on daily are seeing price hikes. Electronics, fast fashion items, and household goods are all affected. Job market turbulence. It's not just about paying more at the checkout. The trade war is causing ripples in the job market too. Manufacturing sectors in particular are feeling the squeeze, and that uncertainty can affect job security for many. Financial market volatility. Have you noticed the stock market's recent roller coaster ride? Trade tensions between these economic giants are a significant factor. This instability can impact your investments, retirement funds, and overall economic confidence. Global economic slowdown. But it doesn't stop there. The US-China trade war has the potential to slow down the global economy. This slowdown can lead to reduced economic growth, affecting businesses and consumers around the globe. It's not just a political chess game. It's a battle with real-world consequences that can hit your wallet, your job, and your financial future. Who wins and who loses? Is it China with its vast manufacturing capabilities, or the US wielding significant financial influence? Spoiler alert, it's not that straightforward. Let's delve into the data. The United States manufacturing sector. American manufacturers have faced increased costs due to tariffs on imported raw materials from China. Agriculture. U.S. farmers have been hit hard by China's retaliatory tariffs, especially on soybeans and pork. This has resulted in significant revenue losses and increased reliance on government aid. China exporters. Chinese exporters have encountered reduced demand from the U.S. market due to higher tariffs, prompting many to seek alternative markets in Europe and Asia. However, this shift has often led to lower profit margins. Technology sector. Chinese tech companies have faced restrictions and sanctions from the U.S., limiting their access to critical technologies and affecting their global operations. We'd love to hear your thoughts. Who do you think will emerge as the dominant force in this trade war? Drop your opinions in the comments below. If you found this analysis insightful, don't forget to like, share, and subscribe for more updates on the global economy.